What's up everybody? Welcome to the Stocks channel. My name is Corey and today we're going to do macro technical analysis and we'll look at all of the indices, the VIX and Bitcoin. So first up, let's take a look at the SPX S&P 500 index. So let's crack open this chart and see what's going on in the stock market today. Alright, so first thing to note is we're looking at weekly charts, so every candlestick does represent one entire week's worth of price action. Alright, so the first thing I want to look on the weekly chart of the SPX is I want to show you how strong this bull trend has been. We're in a very strong bull rally going all the way back to September of 2020, and we've had plenty of times where we've come back down to very critical support levels during this bull rally, and we had many people continuing to say the stock market has topped. So we know for a fact that there's always going to be people saying that every single one of these peaks is a top every time we start to see a pullback. We've seen it all of 2020 and we're starting to see it all of 2021, and we continue to just get these shallow pullbacks and then we continue to go to new all-time highs. So there's nothing different about the last peak we just had. Everybody was starting to say that we already hit a top and we're going through a major correction. And then we came right back up to the previous all-time high and now we're starting to pull back again. So there's always going to be plenty of noise and there's always going to be some type of news article or something to point your eyes to that's going to tell you this is the end and we've already hit a top, and everybody is going to start getting fearful and calling for a top at the same time. If you stay objective, which I always preach for you to do, all you're looking at is the trend and the support levels. If we still have a bull trend and price action is still above critical support, then you just want to block out the noise and you want to continue to trade objectively. Right now, we don't know that this is the top, and many people that continue to try to call a top continue to get it wrong. It's completely irrelevant whether you successfully call the top or not, because it's not going to help you become a better trader. When you trade objectively and you follow price action, you don't care if it was the top or you don't care if it was the bottom, because your trading plan is your trading plan no matter whether you're at a top or a bottom. So right now you need to make sure in this bull market that you have a trading plan, and the number one thing you should probably be looking at is this critical support level right around 4,500 to 4,535. If we stay above this support level and we maintain this bull trend, there's still a very good chance SPX is going higher to 4782 or 4830. We can go even higher than that, but as long as we have the bull trend, this is still a macro level bull market, and there's too many people that are getting fearful and bearish and starting to think we topped out, which more than likely means this bull market is going to continue to push higher. Now, if we lose critical support and we start closing below that level on a weekly chart and we lose our support trend line, then obviously you want to immediately get a lot more cautious, because we are more than likely going to see that full-blown correction, and that correction will very likely be in the magnitude of a 10 to 15% pullback and possibly even lower. So don't be reckless and just continue to buy the dip. What I'm trying to teach you to do is to follow the trend and buy the dip off of strong support levels, knowing that if you break below that support, you can take a small loss and then continue to look for stronger support levels during the correction. But right now, I'm not going to tell you the stock market topped and we're going much lower, because I can't objectively see that in the chart. We still have a strong bull trend and we're still above my critical support level. So as long as SPX is above 4,500, we still have to maintain the bullish bias because we still have a strong bull trend. You can disagree with me if you want, and you can say the market topped if you want, but it's just not objective, and that is not how we approach the stock market right here on the Stocks channel. So right now, looking at this chart and looking at how strong this weekly bull trend is, you still need to stay bullish on the SPX as long as it's above 4,500. We'll really know that we're likely going to see that full-blown stock market correction if we start closing below 4,500 and break this support trend line, because that will be something we have not yet seen in this bull rally. I'll zoom out once more and you can see this support trend line has been holding up, and we've even been holding above the weekly 20 simple moving average, which is also at our critical support level. So it's a bull trend until it's not, and you can plan accordingly if we lose the bull trend and break through critical support. And of course, we still do our day-to-day analysis every day here on the Stocks channel, but this is our macro technical analysis, and we want to understand the market as a whole from a weekly chart perspective, which we know is stronger than the daily chart trends. So watch that critical support level right around 4,500 to 4,535, and those price targets above as long as we have the bull trend at 4782 and 4830. Now jumping over to the bear bull survey, you can see there's still plenty of fear and plenty of bearish sentiment in the retail investors. We have 39.3% of the people that are still bearish and 35.4% of the people that are still neutral. So time and time again, we continue to start to see the market pull back a little bit, and everybody immediately runs for the door and goes to cash or starts trying to short the market. I feel like this is deja vu because we've said this so many times this year, but as long as you have the bull trend and you have neutral sentiment or bearish sentiment, it's more than likely that we're going to continue to go higher. The rationale is that's cash on the sidelines or people trying to short the market that will eventually get short squeezed, which only creates more net buyers and eventually does lead to a FOMO rally, which does send the stock market to a new all-time high. So we still have plenty of bearish sentiment and plenty of people that are neutral, so it's safe to assume there's still plenty of cash on the sidelines. You don't get a survey that's this fearful without there being plenty of people that are trying to short or sitting in cash waiting for the stock market to correct. If everybody is waiting for something to happen and everybody expects something to happen, it's more often than not going to happen. We can also look over here at the fear and greed index, and we can clearly see that the market is fearful with a fear reading of 26, which is very close to extreme fear. So if you look at the sentiment and you see how bearish it is and how fearful everybody is, and then you look back at the weekly chart of the SPX, you can still very clearly see we have a lot of fear in a bull market. When you mix a strong bull trend with a lot of fear and a lot of bearish sentiment, that's usually throwing fuel on a bonfire, and eventually you're going to shoot up some more flames and you're going to see the bull market continue to rally on. Just think about how any market works. It's cash in and cash out. And if all the cash is already out, eventually all that cash will start to come back in, which will help that market continue to rally higher. So stay objective here and understand we have a lot of fear and a lot of bearish sentiment. And as long as we're above critical support with a bull trend with a lot of fear, that is the recipe for a very strong bull market that is likely not yet over and that we've not likely yet seen a top. Eventually, you'll see fear readings that will matter as we continue to go lower. But when you see fear readings in a bull market, it's a lot different than seeing fear readings in a bear market. When we have a bear trend and we see fear readings, it won't matter because everybody will be fearful for a good reason. But when you see a fear reading in a bull market, you want to get a little more greedy if everybody else is running for the door and the trend is still continuing to go higher. Jumping over to the NDX weekly chart, we can also see a very similar story with the NDX still above our weekly 20 simple moving average and still above some of our critical support levels. So the NDX critical support levels are right around 15,570 up to about 15,650. Our support trend line is still a little bit lower, right around 15,200. So we could still see a little bit more downside in the NDX before we see some critical support. But remember, if I zoom out here, we have the same story as the SPX with a strong bull trend and price action still above critical support. So there's no reason to call a top and there's no reason to say that we're going to come crashing down from here until we see some objective price action breakdown through support and or lose the bull trend. We're likely going to lose critical support and lose the bull trend around the same time. So as I always tell you, price action is king and you always want to follow price action first and foremost. So watch that critical support level right around that 20 simple moving average, and if price action starts breaking below that level, you instantly need to start getting a lot more cautious because we could see that full-blown correction. But as long as we're above that level in a strong bull trend, it's more than likely we're going to continue to head higher. Our next price target will be up there right around 16,932, but we will need to break out from the previous all-time high, which is right around 16,580. So watch those resistance levels and watch that critical support. And don't forget, we still have the macro level bull trends. Jumping over to the Dow Jones weekly chart, we can see we're sitting right on top of critical support, which is right around 35,280. And we still do have a weekly bull trend on the Dow Jones as well. We can see the Dow Jones has really gone absolutely nowhere because the price action is not too much higher than what we saw back in May of 2021. So the Dow Jones has been chopping around, going sideways, which means we're more than likely getting that correction through time. And next time the Dow Jones breaks out back above 35,530, we could see a very impulsive bull rally to brand new all-time highs. So you're seeing a trend here where the S&P 500, the NASDAQ 100, and the Dow Jones still have full bull trends and price action above critical support. If you combine that with all the bearish and fearful sentiment, that is usually the recipe for a continuation of the bull rally. It doesn't guarantee anything, so you still need to watch price action at critical support because nobody knows exactly what's going to happen for sure. All I know that if you stay objective and you follow price action, you'll always have a solid trade plan and you'll always be able to react accordingly. Don't go all in on a giant short position just because you think the stock market topped. That's what I'm trying to tell you not to do, because if you're staying objective, you have no reason to believe that this is the top of the stock market. And there's no reason to bother trying to call a top, because even if you're right, you're more often not going to be wrong. So the one time you're right is usually just going to end up you being lucky, and it's going to teach you a lot of bad habits. Get out of the habit of calling tops and stop trying to worry about whether or not the stock market topped. Make a trading plan that works no matter what happens, that follows price action, and make sure you know your critical levels. Jumping over to the Russell 2000 weekly chart, we can see the Russell 2000 is definitely looking a lot weaker than the rest of the indices. We don't have the bull trend, and we're very close to breaking this critical support level, even though we have held above that level for 3 weeks in a row. So the critical support level is right around here at 2140, and we see that we do continue to close above that level, and we are also closing back above the weekly 50 moving average. So as long as the Russell 2000 doesn't lose this critical support, there's still the possibility that we're going to see a strong rally off this support and attempt to break back out above that resistance. Remember, that resistance breakout level will first be back above the 20 simple moving average, which is right around 2263. And then the next resistance breakout will be that resistance trend line right around 2334. If the Russell 2000 at any point breaks back above 2334, it will instantly start looking very bullish. Until then, it could just be a bearish relief rally before another leg lower. So don't get overly bullish when we don't have the bull trend. This is different than what we see in the rest of the indices because they do have bull trends and they are sitting above critical support. In the Russell 2000, we don't have the bull trend and we're very close to breaking critical support, so it's a much different story. So don't rule out the possibility of a bearish relief rally that could take us all the way back up to resistance, but if we can't break above that resistance level, we could see another leg lower. On the VIX weekly chart, we can see the VIX is still closing above 20, but we definitely see the possibility that the VIX could get crushed back down below support and we could see a continuation of this bull rally. Right now, as long as the VIX is above 20, I think you should be cautious because the VIX above 20 is definitely going to be a whipsaw chop city market, and that does mean price action can swing violently in either direction. If the VIX gets back below 20, volatility should subside and we should get a lot less whipsaws and we could see a much more sustainable bull rally. If the VIX gets back above 25, I think you're likely going to see the full-blown stock market correction and a lot more panic selling. So watch the VIX, and if it's above 20, be cautious. If it's above 25, expect a full-blown correction. And if it's below 20, expect to see a continuation of the bull rally. Right now, we see a lot of indecision with the VIX above 20 and below 25. So watch the price action in the VIX going into next week and watch those critical levels. On Bitcoin, we're currently trading right around 47,000, and as you can tell, we did lose the bull trend on the weekly chart. We're currently sitting just above the weekly 50 EMA, and we have critical support levels at 44,000, 42,000, and 39,000. If at any point we start breaking and closing below 42,000, we are very likely going to see Bitcoin starting to enter a very weak market, which means we could be heading into a bear market. But right now, we lost the bull trend, and we still have the possibility of sideways consolidation. So if we hold above 44,000, we could still consolidate and bounce around and form some sort of consolidation wedge, which means we could go anywhere between about 60,000 and right around 45,000 as long as we're staying above these levels. Now, the first sign of a bullish breakout would be a weekly close back above 53,000 and then a breakout of the price action above 60,000. So bearish breakdown would be below 39,000 and a bullish breakout would be above 60,000, with the first sign of a bull breakout above 53,000 and the first sign of a bearish breakdown below 44,000. So watch those critical levels and understand we don't have a bull trend any longer, so don't get overly bullish in Bitcoin unless we can break out back above these critical resistance levels. On the ARKK ETF, you can see we clearly broke down to the bear side out of this consolidation wedge, and we're now holding above this critical support level right around $90. If we can see ARKK getting back above the median of this wedge, which is back above about 114, we could see a false breakdown to the downside and a continuation of the bull rally. However, if we break down below 90, we're going down for another leg lower. That can easily bring the ARK ETF down to about 85 to 81. So watch that very critical support level at 90, and the very critical resistance breakout will be all the way back above 114. Everything else is just choppy in a trading range in between, so watch those critical levels at 90 and 114. So jumping back over the S&P 500, don't rule out the possibility that this is all just going to be noise and we're still going to see the bull market continue on. Yes, we are likely due for a stock market correction, but nobody knows exactly when that's going to come. But we do know if we lose critical support and we lose the bull trend, we're instantly going to significantly increase the probability that we're going to see the full-blown correction. But right now, we just see a very lazy market that's going sideways, holding up above support and holding on to the bull trend. And we see plenty of fear and plenty of bearish sentiment while we're in a strong bull trend. That is a recipe for a continuation of the bull market, and it has been going all the way back to 2020 and all the way through 2021. This is a bull market that has been fueled by pessimism and fueled by bearish sentiment, and we just continue to go higher. So don't trade with the crowd, trade with the trend, and right now the trend is bullish and the crowd is bearish. If you understand that, you're going to do a lot better because instead of following the majority, you're going to be the minority that's remaining objective and continues to crush this market. Also, don't forget that I do have my own trade alert service called Bank Trade Alerts that only trades the ETF TQQQ, and you get all of your buy and sell alerts directly via email and text message. Bank Trade Alerts is up over 6% in the last 3 months in a market that a lot of people continue to lose money in. So if you're still struggling in this market and you need a trade alert service to help you remain profitable, look no further than Bank Trade Alerts. You can find out all of the details and how to join by clicking on the link in the description below. I also have the Stocks Channel Discord where I do intraday updates and analysis to help you navigate this volatile market and stay on the right side of the trade. If you're interested in joining the Stocks Channel Trading Discord community, you can find out how to join the Discord server by clicking on the link below. So thanks for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.